I expect an explosion. Last year was the breakout, 2024, when gold broke above 2,000 and moved up above 3,000. But I think this move is going to mirror, at a minimum, the move from 2001 to 2011, where the price of gold was up sixfold. So if you take sixfold from 2,000, that's $12,000 gold, right? We're barely a third of the way to 12,000 or a fourth of the way to $12,000 gold right now. We are so much closer to the bottom than we are the top. Yeah, I really wanted you guys to buy closer to 2,000, but I don't care. You got to buy it now. Same thing with silver. I was telling everybody 30 was the floor. You got to buy $30 silver. There was minimal downside risk. We barely ever went below it after I said that. And now we're buying $40 silver, $41 silver.
Gold's trajectory is accelerating with a force that few can ignore. Breaking past $2,000 in 2024 and surging above $3,000, the metal is signaling that we are only in the early stages of a much larger move. The momentum mirrors the historic 2001 to 2011 bull market, which saw a sixfold increase in price. Applied to today's levels, that same trajectory could carry gold toward $12,000 an ounce. Silver, too, is showing remarkable strength, consolidating at higher levels and confirming that its long-term floor has been set. Investors waiting for the perfect entry risk being left behind as each breakout redefines what counts as expensive. PeterSchiff, a longtime economist and financial commentator, has consistently warned about the dangers of U.S. fiscal and monetary policy. Known for his accurate calls ahead of the 2008 financial crisis, he now points to soaring deficits, trade imbalances, and misguided government strategies as catalysts for gold's explosive rise. Schiff emphasizes that precious metals and mining equities are not speculative bets, but necessary hedges against systemic risk. Before we dive into his breakdown, make sure to like this video, subscribe for more market analysis, and share your thoughts in the comments. Your feedback drives this channel forward. We appreciate the support and hope you enjoy the video.
Gold hit 3,600 today for the first time ever. Price of gold was up 4% on the week. It's now up 37% on the year. 37% for the price of gold. Now, I've been doing my best to get my audience to buy gold, buy silver. Silver was only up 2.8% on the week. I say only. That's still a big week. Silver closed the week at just about 41 or just over $41. Gold didn't hold 3,600. It closed, I think, around 35.90-ish. You know, traders tend to look at these round numbers and take profits. I wouldn't be surprised if on Monday morning, when the U.S. resumes trading, we gap up in the price of gold well beyond 3,600, which is why you shouldn't wait till Monday to buy your gold. In fact, don't even wait till the end of this podcast. If you are listening to me or watching this on YouTube, pause. Just press pause. Don't worry. I'll still be here. Just pause it. Then go to Schiff Gold and buy some gold right now and buy some silver. Don't wait. Don't wait for me to finish the podcast. This is too important. Put it on pause. Go buy some gold and silver at schiffgold.com. And when you're finished buying it, then come back and watch the rest of the podcast. That's how important it is, right? I want to make sure that people get aboard this train, right? Unlike the Trump train that's going to end in a wreck. This one has got a long way to go. Again, 41% year-to-date gains in gold. Look at the gold mining stocks. The GDX has now officially doubled on the year. So basically, we're through 8 months of the year, right? And we've had a doubling of the GDX. Double. I remember in April, I put out the special report, the best way to buy gold. And I was, practically begging my gold customers not to buy gold. Because I said, you take that money and buy these gold stocks, because I'd never seen them this cheap in my life relative to the price of gold. So I said, below ground gold was such a bargain, you have to buy it rather than the above ground variety. But I also saw the greatest combination of fundamentals that I'd ever seen for the price of gold. And I expect an explosion. Last year was the breakout, 2024, when gold broke above 2,000 and moved up above 3,000. But I think this move is going to mirror, at a minimum, the move from 2001 to 2011, where the price of gold was up sixfold. So if you take sixfold from 2000, that's $12,000 gold, right? We're barely a third of the way to 12,000 or a fourth of the way to $12,000 gold right now. We are so much closer to the bottom than we are the top. Yeah, I really wanted you guys to buy closer to 2,000, but I don't care. You got to buy it now. Same thing with silver. I was telling everybody 30 was the floor. You got to buy $30 silver. There was minimal downside risk. We barely ever went below it after I said that. And now we're buying $40 silver, $41 silver. The problem is, and I've talked to the guys at Schiff Gold, and I've talked to people I know at other gold companies where sales are slow. People just don't want to buy the high. Well, you know what? You got to get used to buying the high. If you don't buy the high, you're not buying gold and silver. You got to buy the high because we're going higher. And the longer you wait to buy the higher the high you're going to buy. So you might as well buy it now, because if you wait, you're just going to pay a higher price. That doesn't mean you're never going to get a down day or a down week, but it's not worth waiting. You got to just read the writing on the wall here and recognize the historic nature of what is going on. In fact, even Bukele of El Salvador, right, the Bitcoin guy, just announced that he bought $50 million worth of gold for El Salvador, right? He was poo-pooing gold a few years ago when he was buying Bitcoin. Now, instead of buying more Bitcoin, he bought $50 million worth of gold. Congratulations. I'm glad to see that. Now, if he could just sell his Bitcoin and buy even more gold, that would even be a better deal. By the way, Bitcoin was barely up today, in the face of a big move up in gold. In fact, year to date, Bitcoin is only up about 18%. I mean, that's not bad, 18%, but gold's up 37%. Bitcoin's supposed to be up a lot more than gold. It's supposed to be a turbocharged version. It's supposed to be gold on steroids, right? But it's only up. And it could easily finish the year negative. But the more important statistic on Bitcoin, again, Bitcoin is 15% lower today than it was at its peak priced in gold in 2021. That's almost 4 years ago. 4 years of 15% decline. We're almost in a bear market in the gold price of Bitcoin. This, despite all the Bitcoin ETFs buying up all this Bitcoin. They didn't exist 4 years ago, right? The NFT craze hadn't hit yet. All the Super Bowl ads, all the celebrity endorsements. We didn't have all these Bitcoin treasury companies. MicroStrategy hadn't loaded up on all this Bitcoin, tens of billions of dollars worth of Bitcoin, and now all the copycat Bitcoin treasury companies didn't exist. We didn't have the Bitcoin president, right? We didn't have the strategic Bitcoin reserve. We didn't have a Bitcoin czar, right? So none of this existed 4 years ago, right? Yet despite all this, Bitcoin is down 15% against gold. And these hodlers are oblivious to all of this. They just look back to the very beginning of Bitcoin and talk about how much it's up. And they don't look at what's been happening over the last 4 years and question why, right? Gold has this huge move. It's doing exactly what you would expect it to do in the face of a Fed that's about to ease into rising inflation. But why isn't Bitcoin doing that? Why is Bitcoin behaving differently? Why is it following risk assets and not gold if it's digital gold? But people are so wedded to this cult that they don't even bother to question their own beliefs. They just assume as long as they hodl forever, they'll make it to the promised land, right? They've believed the Messiah. They just got to have faith, and they have to ignore all of the other realities that would cast doubt. But I don't know why Bukele decided to buy some gold. Maybe he's starting to lose a little confidence because he obviously could have bought more Bitcoin, but he didn't do that. So good for him, right? For coming over to the right side. I think the biggest threat now to the dollar, and one of the reasons that I think the price of gold could go ballistic, the Trump administration's goal is to cement the dollar's role as the reserve currency, to make the dollar even more important and secure its position. And I said, if that's the government's goal, just about everything the government does, they're going to achieve the opposite. Everything that Trump has done is pushing the world away from the dollar. That's why the dollar is going down. That's why gold is going up. That's why China and India and Russia have never had stronger relationships than the ones they have right now, right? We are, shooting ourselves, again, not in the foot, but in the head. We're also allowing China to make inroads, stronger inroads in our own sphere. They're making deals in South America with Canada, right? Because we put big tariffs on imports from Canada and Mexico, and China, China wants free trade. China wants to engage, and we want to, build walls. And so we are lessening the U.S.'s role in the global economy and making the world less likely to want to retain the dollar as the reserve currency, not more. But anyway, on the housing emergency, so all of this is inflationary. All of this is going to, drive up drive up gold and push down the dollar as we expand money supply. Of course, the Fed is going to have to do QE because no one else is going to want to buy this stuff. But also the other thing is the tariffs. I still think that the Supreme Court is more likely than not to strike down the tariffs as unconstitutional. And the problem there is the Trump administration has been touting the trillions of dollars that the U.S. government is going to collect from these tariffs. And they've been saying that, look, you don't have to worry about the massive deficits that were created by the big, beautiful bill, because they're going to be at least partially offset by the trillions of dollars of tariff revenue. So you don't really have to worry, right? Well, I never believed that the government was going to collect anywhere near that much money. And to the extent that it collected any money, it was going to collect it from Americans, American businesses, and American consumers. If the court strikes these tariffs down, and not only does the U.S. government not get future tariff revenue, but it's got to return the revenue it's already collected, I think that is going to be a big negative, because our creditors are now going to be saying, okay, so now what? You ran up the deficits with the big, beautiful bill by cutting taxes and growing government spending, the opposite of what you should have done. And now the one thing that you said was going to offset some of the damage is gone. Now what? We got, and so that's going to put even more downward pressure on dollar and upward pressure on long-term interest rates.
The historical framework of America's paper money reveals just how fragile the foundations of today's system really are. Originally, notes were redeemable in gold and silver, created during wartime emergencies and reissued after maturity. The Supreme Court allowed that limited practice, but never sanctioned the creation of irredeemable paper currency in peacetime. Over time, the Federal Reserve was designed as a private institution, issuing standardized notes backed in part by gold and other bank assets. Its intended purpose was to provide an elastic money supply, expanding in times of growth and contracting during recessions. Instead, it has evolved into the opposite, expanding most aggressively during downturns, thereby entrenching inflationary pressures. The original prohibition against holding U.S. Treasuries was gradually removed, paving the way for debt monetization and today's debt-driven economy. With the Fed's independence now under political threat, the consequences for the dollar and gold markets are profound. Let's get back to the interview.
The paper money was redeemable in gold and silver. It wasn't like fiat. It was paper money that was eventually redeemable, right, in gold and silver. Now, here's what happened. The notes that they issued had a maturity date, and a lot of these notes matured. And so the government reissued them, right? The war is over, and the government reissued these notes. Now, somebody else challenged it and said, wait a minute, the war is over. The Supreme Court said that you can only issue these notes during a wartime emergency. We're now at peace. What the hell are you doing? You can't do this. Went back up to the Supreme Court again. And the Supreme Court said, well, because the notes were originally issued during war, they could be reissued when they mature. Like the government doesn't, can keep rolling these things over because they already exist. So the ones that already exist that were created during a war, they could stay. So now the court ruled that. Now, if you try to say that paper money is unconstitutional, that's the case they point to, right? But all that case said was that paper money, redeemable in gold, issued during a war can be reissued after the war. There has never been a Supreme Court case that has said the federal government can issue irredeemable paper money, right? Paper money backed by nothing during peacetime, right? It's never happened. Now, I don't expect the current court to recognize this and declare any paper money unconstitutional and force us to go back to the gold standard that we had before the Federal Reserve. They're not going to do that. They're not going to disrupt all of that. But I do think they are willing to disrupt to help Trump. I think they will disrupt the concept of Fed independence and say that the Fed needs to be part of the government, which totally destroys the purpose that it wasn't. Because had they tried to make the Federal Reserve part of the government initially, the act never would have passed. And it would have been held unconstitutional, obviously, because the government doesn't have the power to do this. So they had to create this private bank so it could do what it had no authority to do, because private banks are allowed to issue credit. They're allowed to issue bills of credit. In fact, before the Federal Reserve, there were bank notes that circulated from all kinds of banks that people used as currency that were backed by gold. You know, the idea was just to centralize that. So there was one note. So instead of, people walking around in their wallet with notes from different banks, let's say I took the train out to California and I wanted to buy something and I had a note from a bank in New Jersey. What if the guy in California never heard of that bank? How do I know that's legitimate? So the idea was that when I got a note from a bank in New Jersey, I would give it to the Federal Reserve. They would take that note and issue a Federal Reserve note that was backed by that note plus gold, 40% gold. And now I'd have a Federal Reserve note. So when I went out to California with my Federal Reserve note, everybody recognized it, right? That was the whole idea. But all of this was private. Another idea behind the Federal Reserve was to create an elastic money supply. That was like an important thing. And what an elastic money supply meant was that when the economy expanded, the Fed could expand the money supply. But when the economy contracted, the Fed would contract the money supply. Now, that is the opposite of what they do now. See, what the Fed does now is when the economy is expanding, they expand the money supply. But then when the economy contracts and we have recession, they expand it even faster, right? So that harebrained scheme, had they talked about that, when they were passing the Federal Reserve Act, nobody would have voted for it, right? Because that would have just been inflation. And also, again, remember, the original Federal Reserve was not even allowed to buy U.S. Treasuries, right? That's part. If it was a government agency, obviously it could buy U.S. Treasuries. It was banned. It couldn't buy them. It couldn't have them on its balance sheet, right? I don't even think they would have passed the Federal Reserve Act had, in its original form, it been allowed to own treasuries, because people would have seen through that and said, wait a minute, this could be too cozy a relationship. If the Fed can buy treasuries, they could kind of monetize debt. We'll have too much debt. So no, they probably wouldn't have passed it. That is the example of the camel's nose under the tent, right? The slippery slope. You never allow the government an inch, because once they get that inch, they're going to take a mile, right? So we did a lot of damage by opening the window. That's why, this bank should have been shut down. But the problem is where we are now, having Congress or the president controlling the paper money supply is worse than having the Fed do it. And, people think, hey, Peter, why are you defending the Fed? I'm not defending the Fed. I'm the Fed's biggest critic. I just think it'll be even worse when it's being controlled by the president, right? As bad as the Fed has been when it had a modicum of independence, imagine what's worse it's going to be when it has none. But this is the threat that is looming on the horizon. This is one of the reasons that I am just super bullish on gold and silver, and incredibly bearish on the U.S. dollar. The dollar index closed, I think, at 97.7. I think this is the weakest close of the year for the dollar index. Look, it's going a lot lower, but nobody is talking about this yet. They will once the Supreme Court rules, right? But nobody is really talking about it now, other than me. I haven't heard anybody else mentioning the possibility of this happening and why it might happen. And yes, I think the Supreme Court is right that the current Fed as constructed was unconstitutional, but what they are going to create is going to be even more unconstitutional than what they strike down. But they're not going to get that, right? They're not going to go far enough. And so the small right is going to lead to a greater wrong. And that's why you got to load up.
The direction of monetary policy and the fragility of the U.S. financial system point to a decisive turning point. Structural weaknesses are no longer hidden. They are visible in the dollar's decline, the relentless growth of government debt, and the erosion of confidence in central banking. As policymakers scramble to maintain control, the underlying reality is that the purchasing power of fiat money is weakening, while tangible assets are stepping into the spotlight. Gold and silver, time-tested as stores of value, are positioned to benefit from this global reset. History shows that when faith in paper promises fades, capital seeks safety in tangible wealth, and that cycle is already in motion. The opportunity lies not only in protecting capital, but also in positioning themselves ahead of the curve. Precious metals are no longer a hedge, they are becoming a necessity. If you found this analysis valuable, don't forget to hit the like button, subscribe, and share this video with others who need to understand the changing global monetary landscape. Let's continue this discussion in the comments. Do you believe gold and silver's breakout is just beginning? And how do you see the US responding to this geopolitical metals war? Thanks for watching, and see you in the next one.